How to evaluate fund manager performance. To explore more on these areas of financial journey, we have our industry expert Mr. Hariharan with us. Hariharan, the stage is all yours.
Now, again, there were days in the past, when I joined this industry, we used to have this concept of star fund managers, you know, and they used to run the show. Today, what has happened over the last 8, 10 years is that a lot of asset management companies have invested a lot in processes. And when they have invested in processes, what has happened is the fund performance is no longer just a function of the fund manager. It is to also do with the process that is in place now. So what it means is that, because this is a typical question that we keep getting, that there was a star fund manager, Mr. ABC, working in some AMC house. He now quits that company, joins another asset management company as a CIO of equities, Chief Investment Officer. Now people are worried because that fund he was managing in the previous company was doing well. He now shifted to another company. What happens to the old fund? And that is where the process becomes very important, and most AMCs today have it in place. Okay, so it's no longer just that star fund manager is here, is moved there, etc. So therefore, when you evaluate fund manager, just try to look at some of the parameters. Consistency of performance. And when I say consistency of performance, but essentially we are trying to talk about, has the fund manager been like Rahul Dravid instead of a Sehwag? So a Sehwag can hit a first ball for the six, he can get out in the first ball. Rahul Dravid is not expected to get out in the first ball. By and large, he will be consistent, is what we try to figure out. So in number wise, when I say it could be that fund manager has delivered say 18, 19, 20, 21, 24 kind of percentage return, is more consistent compared to somebody delivered 60% return in first year minus 30% in second year. Okay. Third is to look at what is the investment philosophy of the fund house itself. What is it that they follow? For example, just to sort of a quick concept here, I work with Axis Mutual Fund, and we have an investment philosophy which talks about quality and growth. That's our style. Some other asset management company will say that I am a value based strategy or the value based style. So their style is very different from our style. So it's important to look at what investment philosophy is followed by the asset management company. Next is to look at peer comparison. Okay, same category to be compared with. Fifth is to look at the track record in different market condition. When I say different market condition cycles, up market, down market. Because again, when you look at 3-year time period of investment horizon, the 3 years might do very, very good. And the fund manager has been managing it only for 3 years. Again, good dashas running for the fund manager, Jupiter dasha running, Guru dasha running, very good performance. Shani dasha comes, for the performance is bad, right? So it is important to evaluate across cycles and not just look at a 2-year, 3-year short-term track record. Fifth element to look at, again, not very relevant, but just to sort of talk about is fund size and what is the rate of growth of the assets. So there could be a fund house, there could be a fund manager who's managing a 30,000 crore fund. And so 30,000 is a big amount to be managed by a fund manager. And what is the growth in assets? So is he also adding, say, 1,000, 2,000 crores every year to that assets? Now, while as I said, this fund size may not be very relevant, but in few funds like arbitrage funds, this can become important. Okay, so therefore, arbitrage fund typically, this could be theoretical in nature. Sometimes it could be applied practically also. That smaller the fund size, better it is, because in arbitrage you have something called as an impact cost, and the limited set of securities that you can trade in, because you need to also do spot and futures. So there are limited set of companies available, and therefore larger the size, difficult it is to execute those trades without having a significant impact cost. So those becomes relevant there, but generally speaking, not a very important point, because a lot of people ask this question that this fund house has started new, So should I invest, not invest? Because there's no fund size, right? So it all depends, on some of these parameters that you can look at before you sort of analyze and say that pick that this is the fund that I want to invest.
Thanks for your detailed answer. If you have any doubt regarding this or any other financial or investment decision, don't hesitate to book an appointment with our financial expert. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like, and if you are new to our channel, please do subscribe.